Hey everybody, it's Paulo Brantz with this weekend interest rates for March 7th. Hope you had a great week, and I hope you have some exciting plans this weekend. By the way, if you're looking for a house, I'm ready for you. Reach out to me. If you're looking, I'm working. That's a good little tagline. If you need me, I would love to help you and your family on your next purchase. All right, this video is all about interest rates, what happened this week. We're going to talk a little bit about next week. You know, we walked in today with a little bit nervousness with this jobs report, and it came in a lot better than expected. The market absorbed it. We're going to talk about that. And we're also going to talk about how next week can be a big week. Either way, as a result of where we're at from a technical standpoint. So what do you say we go ahead and dive right in? Let me bring to the stage the interest rates of the day. Now, conforming, every rate has gone down from last week. Keep in mind, if you take a look at our current purchase rates, we have a magnificent lender, because remember, we're brokers. We get the ability to shop different lenders to get you the best rate. We have a particular lender that is, for the next week, going to give a tremendous purchase price reduction in terms of interest rate. You're talking VA, FHAs in the 5s. We're talking conforming in the low 6s. It's an awesome time to buy a house. If you have any questions on that, let me know. From a refinance perspective, now is the time to really start honing in on what your target rate is going to be. So what is a target rate? Well, let's just take a step. Everybody wants the lowest rate possible. However, there comes a rate where if you would have missed it, that if the rates went there and you didn't pull the trigger because you wanted a little bit lower and then the rates went up, that's the rate you would regret. That's what I'm referring to as a target rate. A lot of people don't know what that is. That's what I'm here to help you out. Give me a call, reach out, either send me an email, or at the very end, there's a QR code that you can click on and book an appointment with me. Let's find that target rate. Let's make sure we get your house paid off faster, save you on interest. Hey, the banks don't need any more of your money. You need it. Let me help you get that. All right, the jobs report came out today, and the highlight, of course, is going to be the unemployment rate went from 4% to 4.1%. I am certainly not excited that unemployment rate is increasing. A lot of families out there losing their jobs. I want to just honor that from a rate perspective. However, this is what the market is looking for. This is anti-inflationary, but there's more to this story, and I want to take a step back and remind you of our forecast that we did at the beginning of the year. And let me bring up this slide. So this is the dot plot. This is where the 19 Fed members believed the interest rates short term were going to be at the end of the year. So if you look at the top 4.3.75, that's where it's currently at now. One Fed member said that, 4.1253 said that. Where 10 members thought throughout 2025, the maximum rate reduction for short-term interest rates was going to be 0.5% at 3.875, where MBS Highways, who I follow, they believe it's way lower at 3.375. So what was their logic, and what do they know that perhaps the Feds don't know? Let's recall. So we go back to the unemployment rate, and if you look at the chart here, the dark blue, that represents where the Fed members believe the unemployment rate will fall in 2025. So you have 14 members believe that it's going to be between 4.2% and 4.3%. Then you have 5 members that think it's going to be from 4.4 to 4.5. So what does this mean? This means that if we get an unemployment rate at 4.4%, that's going to surprise 14 of the Fed members, and they're going to have to reconsider their decision on whether they believe that short-term interest rate should be dropped or not. Now, if we get to 4.6, that would surprise all 19 members. Therefore, surprise all members. So they would all have to reconsider how much rate reductions would be needed in 2026 or 25, excuse me. That's why if we go back here, we believe that it's going to be more in the 3.375 versus where the 10 members think at 3.875. Now, let's break down this number of the unemployment. This is really interesting. So if you take a look at the chart here, this is from Dan Habib from MBS Highway. This is a brilliant basic form here. Let's break down how unemployment rate is calculated. In January, The labor force was 171 million. The unemployed was 6,849,000. If you divide those two, you get an unemployment rate of 4.01. They round down to the nearest hundredth or a tenth, and so that's where you get the 4%. Now in February, the market was 170 million, 203 increase in unemployment. I know it's not 203,000 unemployed. That brought the unemployment to 7,052,000. Now, check this out. The unemployment rate is at 4.14. Now, from a rounding perspective, they round down to 4.1, but we were 1/100th off of getting to that 4.2. Now, notice that between January and February, there was a change of 385,000 people. These are just people that left the job force and are not included in the unemployment rate. Now, if you include them in the unemployment rate because they're not working, now we're looking at 4.36% unemployment rate. And if you round up, you're at 4.4%. And we're already only in March. And that's why we believe, going back to what we predicted here, that the unemployment rate could reach 4.6%, and all 19 members are going to have to rethink or reposition themselves on where they think the short-term interest rates are going to be. It's just absolutely crazy what's going on with this market. I did a video earlier this week on tariffs. Please take a look here. One of the biggest misconceptions with tariffs is we think that across the board it's going to be a 25% increase. However, just remember, if you're manufacturing widgets here, you're probably importing just a portion of what you're producing. So your package, the whole thing, is not going to be increased by 25%, which, by the way, this is partially offset by the 7% increase in the dollar value. So in other words, when the dollar value increases, things we buy from overseas becomes cheaper. So it's certainly not perfect, but the market did not react too heavily to the tariffs. Now, there's a lot of back and forth on that, and this may change, but as for right now, the bond market really absorbed it and have moved on, and we don't see much fluctuation as a result of the tariffs. Next week, this is a big week. We have JOLTS report coming out, which is very big in terms of jobs openings. We have Wednesday, we have Consumer Price Index. And then on Thursday, we have Producer Price Index, which is all measurement of inflations. And this is something I want to share with you, people out there that like the technical aspect of bonds. I'm going to bring the actual bond chart up here. Let me bring it up. Add the stage. I don't know why. Oh, I got to remove, then add the stage here. Here, let me just bring this up and I'll talk as we go here. So if you look, remember, as the bond price goes up, interest rates go down, and we're trading in these two channels here. They're called Fibonacci levels. You notice, we broke above it here once, and we were brought back down below this level of resistance. And for the last, 1, 2, 3, 4, 5, 6, 7, 8 trading days, we've been in this channel. So there hasn't been much movement in terms of interest rates. Sooner or later, we're going to get news that's going to either break us above, which is going to give interest rates a good push, or below, which is going to increase interest rates. And I want you to notice there's a lot of room either way for bonds to move before their next level of resistance, which can have a really huge impact on interest rates. So stay tuned for more. And if something comes up next week, I'll definitely make sure I send out a quick video. But we're just waiting for that news to break us above or below those resistance levels. And then interest rates are going to act accordingly. Hopefully, they're going to improve. Okay, remember this. If we're not working together, we should. This is here's the QR code to book a hopes and dreams conversation. There is no credit. We're not going to pull your credit. We're not going to take applications. It's just going to be me and you. Take advantage of my 20 years of experience doing this job. Let me help you and your family save money. That's what I'm meant to do. That's my passion, and would love to connect with you. Other than that, you have a great Friday. Have a great weekend. Talk to you.